Can hear my voice. Hey, Casey, good morning. Ben, Biger. Hey, Don, Dove, Glenn, KG, Mark L. Hey, Mohammed. Hey, Mohammed, what happened? I thought you were going to be part of Sal's intensive. Hey, Pedro, Peter. Hey, Robert, Tim. Hey, Warren. Hey, Mohammed, just make sure that, right now I think I gave you some pretty good discounts. I don't know how long they're going to hold, so just let us know, okay? This is price action trading with Saul. Saul is actively scalping the S&P 500 E-mini. We're here on a daily basis. If you're coming in from the outside, look for the link and join us live in Zoom. Yeah, the link should be pitiq.tv. pitiq.tv. Got a nice group of people that are part of Saul's Monthly here. Welcome. Got some guests coming in. Welcome, guests. We have those that are part of Saul's Intensive, where he takes you into private class and he teaches you his methodology on a one-on-one, small group environment. It's where you really delve into the opportunity when it comes to the entries, exits, and stops in and around the scalping zones or price action trading levels. I'll be popping in and out. Sal's going to be joining us shortly. Right now it's 9:20 on Wednesday, March 3rd, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. You're trading between you and your broker at your own risk. Hey, Alex, welcome. Hey, Alex Z, let us know how you found this service and welcome. Hey, Alex, I see you raised your hand. You can use the chat feature. You got it. Welcome aboard. How did you find Sol his price action trading? We've had some different reach outs lately, so we're just trying to see what's driving the traffic. Well, you've come to the right place. We're focused on the S&P 500 E-mini, which is a financial index, an index future. You see a series of 3 charts in a separate chart window. Hey, HG. Hey, Gary, there's a set of 3 charts. Let me know if you can hear me first. Okay. When Saul pops in, which is going to be popping in shortly, right now it's 9:23, comes in around 9:27-ish. When he pops in, he refreshes the screen. You would be seeing a series of 3 charts, 2 time frames for the S&P 500 E-mini or a 30-year bond chart. You could go out and come back in. It might be an issue with, the internet not putting up the screen, at least on the first try. Usually works pretty well, just so you know. And welcome aboard. Hey, Maureen, good morning. Anybody else having any problem with the screen? It can happen. Come on, Oscar. Yes, I'll have to look at that when he gets in. That's not the bond screen. Looks like it has some distortion going on there. So, Oscar, appreciate you letting us know. Thank you. Yeah, Saul could be working on behind the scenes. Yeah, it looks like they're frozen at the moment. Hey, Gary, so that means you're okay? You're able to see the charts? Okay, great. You went out and came back in? I think I saw that. Well, that is good. I've noticed some slowness in my internet today on various points, getting everything set up today. So something could be going on out there. It's amazing how we count on the internet so much and the speed. Yeah, no, could be. Zoom also had an update today, so it could be their update. They do a lot of updates. Hey, Dan. Hey, Dan W. Did you want to follow up today on what we spoke about? Hey, good morning. Hey, Fred, Ian. Hey, Dove. Don J. Dean.
All right. Good morning, everyone. Can everybody hear me all right? All right, fantastic. Let's give you our levels for this morning, and let's see where we go from there. Our pivot this morning is 38.59, 38.59. Resistance right up against this 65 area, but it just tested it right now, so be a little bit careful around there. And above that, 74, 83, 90, and 98. And support below at 53, 45, 38, 32, and 23. Pivot 59, support 40, 53, 45, 38, 32, 23, resistance above 65, 74, 83, 90, and 98. All right, these welcome some of the new folks that are here. These are levels that we give out. We kind of use as a guide for the day. We are trying to find levels in the market where we can scalp the market. We're looking for about 2 to 3 points on our trades with a similar 2 to 3 point stop in our setups. We feel that there are these inflection points that the markets will give us an opportunity to have those opportunities to scalp the market. And these levels, in addition to the price action opportunities that occur once the market paints some bars, together we put a methodology that helps us find these inflection points and be able to scalp the market, because we don't believe the markets go straight up or straight down. So consequently, we're trying to find these areas where the markets will give us points to bounce off of. We are always at the mercy of volatility, and we never know how many trades we might get in the course of the day. We try to average about 4 to 5 trades in the course of the day. Yesterday, if you were with us, we were well into the 7, 8 level, even by 1 hour into the day. So we just never know how busy we're going to get or not. All we can do is get a game plan going, and then we're at the mercy of what the market is going to bring to us at any given day. So that's what we try to do here every day. And we used to be do our room here from the floor of the exchange, but due to the COVID situation, that has brought us to my basement, but it really hasn't really deterred from any kind of opportunities that we might have or taken away from the work that we do. So that's a good thing. It's a good thing to know. If you look at the chat box area, you'll see the levels that are printed down there for you with the pivot and the support resistance levels. Like I said, that's a guide that we use. Now be careful here around the 65, only because of the way the price action dictated, maybe a little bit higher now, up at 65, 66, 67 area. It still comes into play as well. So just in case you were concerned or worried about how the price action was going to play itself out up here. Yeah, so like I said, we're at the mercy of volatility. Now, this morning we had again, be a little bit mindful here around the 65 area. If you're going to take it, it's a little bit more risky than it was, even 5 minutes ago. So keep that in mind if you're going to trade. Obviously, you have to make adjustments. And like I said, these are just a guide. It's nothing etched in stone here. And if you see how the price action was and I reacted already, you might have to change and adjust your entry points or cancel the trade altogether. And those are all options that you have, right? There's nothing here that's going to tell you that you have to stay with these levels if the price action was telling us something different. Okay, just keep that in mind. Like I said, some of our traders even canceled the trade because we just missed it. Well, we got up to 64 and then bounced off. So you adjust your risk. And how do you adjust your risk? By canceling the trade, by trading less contracts, trading a tighter stop. All these things come into play. Adjusting the level up or down depending on where you're at. But like again, these are all options that you have, and those options come into play when, depending on the price action, this is one of those situations. So we gave you a warning before we got there. So it's up to you as to how you adjust the risk that you're going to take as it comes up here to our blue band. So again, we are trying to find these levels where markets will bounce off of and give us an opportunity to scalp. And as we come up here to our blue band, see what it wants to do around this level here. If you're trading in, maybe that's where you adjusted. And you're getting a nice little rotation here off of our blue band opportunity. Again, we have different setups that we have or we use, again, depending on price action. Like I said, the levels are just a guide for us. Doesn't mean that this is it. There's different opportunities that occur within these numbers, and again, depending on price action. And all together, we put together a methodology that helps us encompass the levels, the setups, and the opportunities that we have to scalp the market. Again, we're looking for about 2 to 3 point trades, especially, and that's all dependent on price action and volatility. If the volatility is within reason, it's not going crazy. I mean, we never know when things get a little bit more volatile, and you have to adjust your stops accordingly. But that's okay. That's what we have to do here, because you're traders. You're coming in here every day. We have no idea what the day is going to bring us. We just know that we have a game plan, and then we work around the game plan. Sometimes it's easier, sometimes it's not. Such is life. That's what trading is all about. The bond market, the financials actually have traded in the June contract right now. So they've switched over officially. And I would assume that we will probably either next week or the week after trade the switch over in the equities as well. Again, so we came here off of our blue band. And nice rotation there off of our blue band for us. No, I don't have numbers for, I used to have numbers for the bond market, but obviously I was a bond trader, if some of you know, but because the bond market has become so entangled with the Fed, that the government basically runs the bond market, so it doesn't really trade well technically anymore. So we decided to try to find a market that at least gives us an opportunity, a decent opportunity to make some money. The bond market, unfortunately, has not done that, or it doesn't work technically well. So as much as I want to trade the bonds and love to trade the bonds, I just doesn't do too well for us. As we nice rotation there off of our blue band. If you adjusted, you had to adjust your entry point there a little bit to take advantage of, like I mentioned earlier, the price action is when it got up to 74 area and we had 65. Obviously, that wasn't going to work. If you adjusted a little bit to the upside and took into consideration where our blue band was around the 69.70 area, then you had a nice rotation here off of that level. Again, sometimes you have to adjust to market conditions, right? And what the market was telling you in the price action. And this was a perfect example here of adjusting a little bit to the price action and to what the market was telling us. Consequently, we were able to take advantage of this nice little trade here. Hopefully, some of you were able to. We repost the levels again in the chat box area in case some of you are coming in here a little late. We use these levels as a guide for the day. Doesn't mean that we, like I said, none of these numbers are etched in stone, right? We had to already make an adjustment to our first resistance level. I spoke about it when we opened up and how we traded. Hopefully you were able to adjust a little bit and adjust up because of various reasons, like I was mentioning. And we're able to take advantage of this little rotation here off of that. Well, I got up to got up to 70 and then rotated down. Now, can you adjust that much? If there's a reason, and we can adjust. We had a reason there when the blue band was coming in there at the 69.70 area. So blue band is just a Bollinger Band that gives us an opportunity to find these little areas that the markets bounce off of. Why do I use Bollinger Band? Simply because it works. No other reason. And we have to know when to use it. It's not always a use, but most of the time, it's one of those trades that some of our traders like to incorporate into their everyday trade because it works so nicely. You have to find as an individual trader here, or independent trader, right? That's what we're trying to do here. You are trying to find these areas on your own so that you can trade independently of myself. I mean, it's nice that I'm here all the time, but you're trying to trade independently of myself. And as we completely rotate down here from these highs, coming quickly down here to the lows. It's amazing. If I knew that was going to happen, I would have told you. So quickly came down to 54 and change, and then coming back up here. Now we're trading both sides of our pivot. So very, very, market's getting a little choppy now. And it's trying to decide, are we going to take into consideration what's going on with like I said, the reason the market kind of drifted down here was at 7:15, the ADP number came out, which was the private sector jobs report. And that always comes out the Wednesday before unemployment. Obviously, unemployment is coming out on Friday in 2 days, and the ADP numbers preliminary number from the private sector. They were expecting 200,000 some, and it came out at about 100,000. So not they kind of missed a little bit, and then again, market here just kind of didn't like that number. So today, right now, we have. In 5 minutes, we have the PMI services number that comes out. It's a little small number, not a biggish number. And then at the top of the hour, in about 20 minutes here, we have ISM non-manufacturing index that's going to be released. Could be a little bit of a market mover if you're trading. We do have a number of Fed speaks, in case you are wondering, for later on at 11 o'clock. There's a Fed speak at 12 o'clock, another Fed speak at 1 o'clock. The beige book is going to be released as the market rotates down here to the 53 area. That's where our level of support is. Again, if you're going to take it, just keep your stops in, right? And just let the market kind of scalp its way. We have to scalp our way around it. As we quickly come down here to the Well, if you did scale in there at 54, you getting paid off here. Did anybody get the 3.5s? I got 54, but I didn't get the 3.5s. Okay, how you scale in now is important because we are not going to be perfect, right? We'd like to be. Yeah, but we're not. So we'd like to scale in around a level. Like I said, some scaling a half a point above and below, others scaling a point above and below, depending on how many contracts you're trading. Obviously, if you got in there at 54, you got filled, it gone down right to 53.5. But if you didn't, obviously, it would have been nice to get 53.5s, but I got a 54, and then we had a nice rotation here. And again, it's just a matter of scaling in, how you scale in. So now if you have any scales below or that did not get filled, they become a little bit more risky to trade. I mean, I wouldn't, because we got filled and had a nice rotation and a profit rotation here against our 53 area. If you have anything below that right now that didn't get filled, it's a lot more riskier second time to it. So I would be a little bit careful here if you have anything here. So if you have 53 and you didn't get filled, I would probably not. I would probably cancel it because it's you wanted it that last go around a second ago here. It's unfortunate, but it's okay. It happens. Like I said, we're not perfect. So if you have the 53 and you didn't get filled, I would suggest that you cancel it and look for the 45 level below if you're just trading on one lot and you have the level straight up. All right. So, but again, we scale in around. If you're going to leave it in there, it's a lot more risky right now than it was, like a few seconds ago. As long as you understand the risk, it's up to you whether you want to stay with the trade or not. I'm not telling you to abandon. I'm just throwing suggestions out there and trying to explain the risk, and then it's up to you as to whether you want to stay with the trade or cancel the trade. Okay. So I just want the goal here is to make you an independent trader, right? I'm not here to, call out trades or anything like that. I'm here to help. We do have a number coming out here in about a minute, and you can kind of tell a little bit that there's a number. You see how the ladder ticket is very dried up. There's, especially on the upside, there's like 100 lots. There's no 100 lots anywhere on the upside there. So it's very, very thin right now, and that's just because there's a number that's going to be released, and we'll see what happens here. And it's going to be released in about half a minute or so. So again, if you always could tell if there's going to be a number if I don't say something, or maybe I'm not around and you're trading, or if you're just trading on your own, you can always tell that there's something up when the ladder ticket gets dried up like it just did. All right, so we warned you here about the 53 level, the way it's traded just prior to that. I don't see the orders pending. I just see that the ladder ticket is very dried up. There's no 100 lots up and down the ladder ticket. That means the bids and offers are at the most 40, 30 lots up and down the ladder ticket. And usually there's at least a couple hundred in there at each price. All right, so that's how you can always tell that there's something brewing in the background. As the number is released now, and you'll probably see the orders slowly come back, and then we'll probably lighten up again at the top of the hour against the other backdrop of the ISM non-manufacturing index number that comes out. So market's a little bit nervous. Again, we suggested not trading the 53 because of the price action, just like we had told you about the 65 earlier. And you could have made the adjustment a little lower on this 53. That would have worked if you got down to 52, 51 area. You had a nice rotation off of that. Again, sometimes you just have to look at the price action to help tell you what to do, right? And I'm here to explain the risk. It's up to you to make those decisions on your own, because that's the goal here of our education class, is to give you the tools, and then you independently have to say, all right, how do I take advantage of a level, or how do I take advantage of the price action? All of these things come into play as you're a trader, and you have to make these decisions. Now, sometimes the markets, because they move so quickly, could be algorithms, could be just an influx of orders that come in at the same time. There's a fundamental news that comes in, and everybody reacts to it the same way. You're going to have some gaps and some flushes, which is fine. That's the risk of trading. But again, that's why we tell you to keep your stops in place so that we don't get hurt by any one of these numbers that don't work out for us, or any one of these news items that come into play when we're not aware of them. Like when we knew that there was this number that's coming out here at 8:45 and also at 9 o'clock now here in the next 12 minutes. So we know these numbers are up, but sometimes there's news that comes into the market that we are unaware of, or somebody makes some news by having a press conference or saying some policy change or something, and that creates some volatility that we're not going to be privy to, obviously. So, and then that's the reason we have stops, because we never know when those situations are going to occur. Yeah, there was a 50 area there that if you were watching the price action, there was only a 100 lot bid, but every time it got hit, there was a 100 lot bid. So if you saw how many contracts were traded, you kept seeing that the 100 lot bid was there, even though it was getting taken out. So 300 and some traded down there, but there was still a 100 lot bid. So obviously that's one of those algorithms that tells you I want to buy a bunch there, but I'm only going to show you 100 lot at a time. And it's not that we're geniuses here. You just have to see the price action sometimes to tell you what's happening. And that's what happens sometimes. You have these orders sitting behind. At least the algorithm was, okay, I'm only going to show 100 lot at a time, even though I want to buy, let's say, 500 or 1,000. Who knows? Who knows what's behind it? But kind of that's when they tried to sell it through and they didn't sell it through, and then so you got this little rotation quickly back up here to 55, 54 area. But that's because the markets are just, there's a lot of people who are scalping out there in addition to the position traders, and they're scalping for maybe 2 or 3 ticks, not points. So it's a little bit different for them. They're scalping size for a lot less, and that's why you get the volume that's so high, right? I mean, there's multiple ways to trade out there. There's not one right way or one wrong way. So at 8:45, so nice rotation here off of that 50 area. 8:45, there was the PMI services index, and now at 9 o'clock here, there's the ISM non-manufacturing index. PMI services index, not really a big number, doesn't really move the market that much, but they still, market's a little nervous. And it did react to it a little bit, and he had a nice, once they couldn't get through 50 here, you could see what happened. You see the bears lost this little battle, and they have to run to the exits all at one time to get out of their shorts. And you get this type of play all day. You get people who are trying to sell the market through, and people who are trying to hold on to it, who are getting long, and you get this back and forth between the bears and bulls, and that's why markets move around a little bit, so, but that's okay. We're just trying to find these areas that gives us an opportunity to scalp the market. So we want them to do all this. We just want to be able to be situated in the right place where we think that these inflection points will give us an opportunity to scalp the market. Again, if anybody want to ask any questions, please feel free to ask. We come up here to our blue band again. You can ask a question in the chat box area. That's where I have that up there. If you did sell the blue band, you're getting a nice little rotation here off of it. If you look at the chat box area, you'll see the numbers that we released early this morning. And like I said, they are a guide for us. We have to adjust sometimes, like we did on both our support and resistance, first support and resistance levels. Hopefully we're able to do the same thing. We did have a nice rotation here off of our blue band again. For those who are trading, I kind of mentioned that when it got up there. Hopefully some of you took that. As far as the blue band, like I said, it's one of those things where you have to know when to use it and when not to. Now, we've been using it twice, and it's worked very nicely. All right. No, I don't. You're getting too much information there, Mohammed. You're overflowing your head with information when you're looking at too much stuff. And sometimes if you just look at what's actually traded, the actual numbers that are traded, you'll are able to find where those, where the orders are. You're telling me where the orders are. I finished just kind of explain to you what happened down at the lows with the 50 area. You're not going to see those orders because of the algorithms that are in there. And there are algorithms that are in there that say, okay, I'm only going to show you 100 lot, but I want to sell 1,000, or I want to buy 1,000, but they're only going to do it 100 at a time. So when the markets are whipping down, you get to a price, and this algorithm comes in there and is only showing you 100, but you kept getting hit. It's happening so fast you can't even see it because it's a computer program. And so yeah, you can see where those orders are. Sometimes they're open, they're in there, and you can see what's bid or offered in the ladder ticket. But really, if you try to lean too much on that, you might. It's not something that you should lean on, only because of the way the computer programs are out there being used to kind of fool people, because they know that people are looking at it kind of stuff, so they don't want to, show their hand, so to speak. So I do look at what volumes actually traded. That is a good tool for us, and we use that sometimes to find value areas and levels where the markets will expand and contract from. Again, that's another thing that we look at, but that's again what we're talking about, or what I'm talking about here, is stuff that's not too complicated. You get into that, book map and order flow stuff. You get, if it's something that a computer program can manipulate, it's a problem for me. And those things are something that computer programs can manipulate. But total number of contracts traded at a specific price along the ladder ticket, that's not something that can be manipulated. It is fact, right? Support and resistance areas are fact. Do they always work? No, but they're fact. Why do they work? Because other people see the same thing. And as long as we try to find the stronger areas, then we should be happier. So, but, and I've said this before, whatever we do here, if you use or lean on something that has been working for you and you're comfortable using it, you can take our stuff and add to your repertoire of trades. I'm not telling you not to do something here that if you are comfortable using, then you should continue to use it. I'm just saying that we have different things that we look at, and that could help and get your trading to another level. But if you ask me about that kind of stuff, that's why I tell you why I don't use it. So again, we have ISM non-manufacturing coming out here at the top of the hour in about 4 minutes now. So be a little bit careful. We dipped down to 50, came back up. We're hanging around, got above our pivot there. And now we're just we had a little rotation there off of our blue band twice now. Our levels, both our first resistance, second, and first support levels had to be adjusted. Again, due to the price action. And hopefully you adjusted them. You might have had to cancel them, whatever the situation might be, whatever, it doesn't really matter. You just have to make the adjustments so that you don't get run over if you use the level straight up or straight down. So, and then our blue band rotations have happened a couple times. So we do have remember now, the Fed is got a 11 o'clock, a 12 o'clock, and at 1 o'clock, there's the Beige Book that's going to be released. And Beige Book is a culmination of the different the Fed banks giving you a reading of their economic conditions in the different areas that the Fed have banks in. So those are all going to be released. The biggest, you have the Fed speaks, and then at 1 o'clock if you're trading, 1 o'clock Chicago time if you're trading, Beige Book will be released. So that is something that you should be concerned about if you're trading, which means if you're trading that late, be careful. We are also trying to focus more on the morning hours. As you can tell, there's a little bit more volatility here in the morning as the day goes on, and this is all dependent on it. Any day is different. I'm just saying, for the most part, as the day goes on, the trade in the late afternoon gets a little bit stickier, doesn't trade as well. The price action opportunities are a little bit different. There's different dynamics that occur in the afternoon versus the morning. And so we try to focus more on the morning hours for us to bank our money, so to speak. And then, then the rest of the day, we just kind of watch or maybe just use our levels as opportunities to trade. The price action opportunities is when they occur later in the afternoon, they're there. And you just have to make sure you use your stops in, because they can easily get run over because there's a lot less traders trading at the time, and also the volatility is not as the volume sometimes could be less. It all depends on the day. I'm just saying, for the most part. That's what we feel with the morning hours is much better trading for us with what we're trying to teach here than anything else. We come here, we're retesting the low here again. That 50 area, the 50 area is still there. You could tell they're doing the same thing, and they finally sold it out. There was 1,000 lot right there that had to get eaten up, and finally somebody said, I'm just selling it. I want to sell more. All right, we got down here to our next level we have is the 45 area. That's our next level of support here. As we quickly come down here to the 45 area. Again, the only problem we have now is there's a number right now. Okay, so if you're taking it, you can see on the ladder ticket lightened up very quickly. So you're taking a lot of risk here if you're going to trade with this number. But if you scalped it there, you should have got a quick scalp right before this number, and you can get out right now. All right, and hopefully you did. If you did, that took a lot. That happened in less than a minute. That whole trade right there. Okay, so the number is out, and looks like it's a little bit. They're happy with it. They sold it off there and they knew the number was going to be released, and they didn't want to be long, and they dumped it off, and they came right down to our 45 area. Again, if you did have the order in there, you got paid off really nicely. Again, I'm here to explain the risk, and it's up to you whether you want to take the risk or not. Okay. That's all I will say. I'm not telling you that you shouldn't have taken a trade. I'm not telling you you should have taken a trade. I'm telling you that it's a lot. It could get a little crazy when the number's out, and I'm just banking on my experience of not trading in numbers. That's it. Now, if I had the order in there, it rotated. I got in, I canceled the other ones, and I was able to scalp the market as the market popped up really fast for me here. So again, now the 45. Just like before, if you had the 45 straight up, it's a little bit more risky. So you don't want to, if you just have 45, I wouldn't take it anymore because of the risk involved with the way the price action reacted just above it. Okay. So again, if you're taking it, just keep your stop in. If you adjust a little lower, that's fine too, because I always have a secondary support or resistance beyond the level to kind of back us up. So that's why I say that you can adjust a little bit sometimes. Okay, if you saw what happened there at 44.5 was the same thing that happened at 50. Okay, it went down there, it traded 900, but you only saw 100 at a time, right? And you got a quick little pop up there. So same thing that happened down at 50 happened here at the 44.5 area. Somebody's playing with these algorithms today really nicely. you got to be quick to see it. I don't know if you saw it or not, but it was right there. The same thing happened. And if you did dip your toe in there, you get paid off here. $991 traded at 44.5. You don't see the number of contracts traded? Does anybody can confirm that for me? Yep, 991. All right, that's exactly what. But they did the same thing there. You never saw 900 bid. Right, 991. You never saw 900 bid. You just saw 100, and then all of a sudden they just like ballooned up. No, it's 44.5, 900, and you might be looking at the micros there, Dan. We're looking at the minis. At 44.50, now they went and retested it, and another 100 lot came in there. Somebody was definitely having. So anyway, the same thing. Whatever. I don't know what you guys. 991 was confirmed by a couple of guys. Maybe you were looking at the mini. I'm looking. Maybe you were looking at the micros. I'm looking at the minis. Yeah. Let me see. Yeah. No, it was 900. In the minis right now, there's 1,024 to trade it. At 44.5. Right. So that, but I'll just, you have to be what, if you scaled in, like I said, if you scaled in a little lower, and you had a reason for it, you got in there at 44.5, and it got a nice little, and we had the backup. Yeah, that's exactly right there, Peter. That's what I have also. So, if you did see that, you kind of saw the same thing happen there at 44.5 as it happened at 50. And that also, if you were trading, like you have like a quarter of a second to make that decision as you try to get in there. Kind of hard to do. Hopefully you had the order already in place and you had a nice rotation off of it. Again, like I said, you can adjust a little bit lower. So when we got down to 44.5, if you adjusted to the 45.5 and you adjust a little bit lower, maybe you got in there at 44.5. Maybe you didn't. That's fine. Next level on the downside we have is 38. We're working today. Yesterday was a lot easier. Man, yesterday was a lot easier. We had yesterday in the first half hour, I think we had like 5 different trades. And we didn't. It was just, we didn't have to really work that hard. All right, good. HT. Yeah, we didn't have to work today. We're making adjustments. We're having to work a little bit. So yesterday was a little bit more free flowing. And like I said, we never know what the day brings. We can just take what the day gives us and go from there, and that's what we're doing today. If we are just taking one day at a time and one opportunity at a time, and sometimes we have to make adjustments to those, to the levels, and then we have to make adjustments to the entry points, and we have to be concerned about time. All of these things were not. Yesterday, things were a lot more smoother. All right, that's okay. That's fine. The amount of the orders, well, the ladder ticket that you have has bids and offers up and down the ladder. So next support level we have here is down here at 38, just in case you're wondering. So the ladder ticket has bids and offers up and down at each price, right? Is that correct? You see that? All right. And then there is a, if you go to your, I don't know, profile, somebody said, or you go to your properties and maybe you have a line, a window, a bar there that tells you how many contracts traded at each specific price. So you have the bids and offers at each price, and then you have the number of contracts that are traded at each specific price. So together, that's what we're talking about here. Do I have a amount of orders? I don't know what that is. Like I said, they're only showing you, 100 lots up and down the order ticket, but it doesn't mean that only 100 lots are trading at each price. All right, that's just a facade. There's a lot of orders that are happening that are happening so quickly you don't even see them, and that's because computerized trading. So we try to keep that in mind. We know that there's orders behind the orders, behind the orders, behind the orders. So we don't really care. We're just trying to find those the inflection points that'll give us the opportunity to scalp the market. I don't know if that answers a question there, Roop, or not. Hopefully it does. All right, let's see. So support levels at 38. The good resistance right now would be up at 58 or 59, which is our pivot. And, so right here in the middle, kind of no trade zone. Be a little bit careful, mindful, concerned. Don't trade so much. You'd be guessing here as if it's going to rally, if it's going to break. So we have to be patient and wait for the opportunity here. Let's see, while that happens, the U.S. will be able to vaccinate the entire adult population by the end of May, according to President Biden, bringing the target forward by 2 months. That's largely thanks to the deal his administration engineered between two of the country's biggest drug makers. The U.S. government has agreed to provide Merck with nearly $270 million to produce the vaccine for Johnson & Johnson, which received FDA emergency use approval this past weekend. Merck is already one of the world's largest vaccine makers, but it has fallen behind the race to develop the vaccine for COVID-19, and it's instead going to be using the fresh federal funding to produce raw materials, scaling up the manufacturing capacity, and complete the fill and finish orders. The funding is in addition to Merck's continued investment in its global vaccine manufacturing network as part of the planned capital investment of more than $20 billion through 2020, from 2020 through the end of 2024. So this type of coordination between companies we saw in World War II, Biden said, I want to thank Johnson & Johnson and Merck for stepping up and being good cooperative citizens during this national crisis. The White House is also boosting the number of vaccines doses being sent to states each week from 14.5 to 15 million, up from 8.6 million when Biden took office in January. So those numbers, as far as vaccine numbers, should be able to, like I said, in May, it's not bad. It's if people want them to take them, they're there to take. The remarks came shortly after Texas became the largest state to end its mask mandate and to authorize all businesses to reopen. 100%. Texas was all followed shortly thereafter by Mississippi, where Governor said that he would end a statewide mask mandate effective Wednesday, adding it's time. On the other side of the fence, CDC director said that she is really worried about more states rolling back health measures. At this level of cases with the variant spreading, we stand to be completely lose the hard-earned ground we have gained. So you have both ends of that conversation going on as we continue to downtick here. Next support level we have is 38. Again, if you're going to tell me I want to sell it here or there, up there, I had 60 to 59 area. I'm taking safer support or resistance. Doesn't mean that there's others that along the way that could be taken or could have been taken. But we try to wait for the Sometimes it costs me, but it's okay. I'll wait for the better level for me to enter into an opportunity to scalp. Sometimes I feel that if you're trying to scratch the surface for a trade, you get yourself in trouble. So instead of that happening, let's just be patient and wait for an opportunity, a better opportunity for us. Again, the last thing I want to do is create more um, uh, trade so that I have to give my broker more money. I hate to do that. So let's try to stay away from just trying to guess where the market's going to stop. At least try to find a good logical reason for an entry point instead of, guessing. All right. So again, we have 38. Come down here to 40. See what it wants to do. A little bit of pressure here with the bad number from ADP that came out just prior to the market opening up, and the market is not really liking the fact that the prospects of unemployment is not going to turn around. Yeah, at least that's what this has started, this rotation here to the downside, because we were up earlier this morning. So happens. We have had to work this morning, right? Making adjustments. Talking about it yesterday was so much easier. I guess I can't look at yesterday anymore. It's just, I was a breather yesterday. I know. So I was spoiled by one day. All right, so we're flirting with the 38 area. See what it does here in the next, before this bar closes, if we have to make an adjustment or not. Okay. All right, down here against down here to 39, and trying to see what it wants to do. Now we got our 38. Again, just keep your stop in, all right? And market just kind of just testing this 38 again. Just make sure you keep your stop in there, because we just never know what's going to happen, when there's going to be an influx of trades coming in or not. For the time being, there's a little bit of market's obviously a little bit heavy. I will give you some more levels here below this 38. As we're coming back up here to the 38, sometimes it gives you a chance to scratch some of them, right? I always say that as a indication that that's what I was doing. Especially since we didn't get the rotation that we're looking for. So you get out of some. The market gave you that quick chance. Obviously, you got to have your order in there, right? I mean, it's all I can say. Giving you another chance to get out of some here before, if you didn't like the price action, and I did not like the price action, so I'm out of some of them. I just got a little bit here to see if we can bounce off of it. My stop right now would be down at the 34 for my rest of whatever, but it's a small amount, so I'm okay with that. And next level on the downside we have is 32. Let me give you some more levels here on the downside as the market continues to downtick. Next level on the downside we have here below the 32, then 23, then 15, 08, and 38 even. 15, 08, and 38 even. These are levels below. And like I said, I never know which way the markets are going to go, right? I'm always at the mercy of volatility on any given day. If I knew that we were going to break, I would have told you. Trust me, I would have told you. I don't hold anything back here. So there they are in the chat box area, in case you were wondering what the extra levels are below. Well, there they are. There they all are. All right, we talked about scratching some of these 38s when the market gave you a chance to scratch, which is hopefully some of you did that. As again, you have to appreciate, you have to understand the price action, and I didn't like the price action, so I was suggesting we get out of some or all, or gave you a chance to scratch, depending if you scaled in a little bit. Maybe you made a little bit of money if you scaled in on the low end there. Either way, hopefully you were able to scratch some of them or scratch whatever you're trading. And look, there's always another number, or there's always another level. There's three things that can happen with a trade, and two of them are good. One obviously is a bad thing, which you can lose money on a trade, and the other two is you can make money. And the other good one is a scratch. Sometimes my best trades have been scratches, which a scratch means you buy it at 38 and you sell it at 38, right? You don't make anything on it except some commissions, which is better than taking a loss. And so there's nothing wrong with that sometimes. And like I said, some of my best trades ever have been good scratches, where it's had a nice big. It's like I worked the order, didn't get stopped out, came back, maybe added on a little bit, and was able to scratch the trade, and was like very happy that I did. Thrilled, sometimes thrilled. Like I said, some of my best trades, those are the trades I remember. Yeah. You remember some bad trades sometimes because they run you over and you're like, oh God, those are the trades that you remember. And also some of the best scratches I remember. That I do remember some of my best scratches. It's kind of a weird thing, but I don't remember the winners. I mean, there are a couple good winners I remember, but I don't remember those. But because I guess I'm supposed to make money, so I don't know. But those scratches, though, some of those scratches are some of my best trades. Anyway, here and there. So again, we did dip here to the. I got down to 34, 33 there and change, and almost down to our 32, which kind of a bummer too. Now we're coming back up here. A little bit crazy, right? The volatility is a little bit there, but it's interesting. Don, hopefully you got out of some here. All right, that's where we're at. Like I said, not everything's a winner here, but that's trading. Sometimes you have to work a trade, and working a trade is okay. There's nothing wrong with working a trade. This was a perfect example of working a trade where we got in, kind of ran through, gave us a chance to scratch. Maybe you got in a little bit better after that with less contracts. Again, everybody, it's sometimes you got to work a trade. Kind of stopped there, it didn't keep going. So, maybe again, everybody does trades a little bit different, but you gotta, whatever the situation is, you have to manage your risk. And how I managed my risk there was to lighten up the load a little bit when it gave me a chance to. I talked you through the whole thing too, so I get criticized for not showing trades or not doing trades. First of all, I can't. Secondly, I can talk you through it. That's what I just did. So that's what we do here, right? Okay, getting a little bit, there's some volatility here today, just a little bit. Maybe, again, the ADP number was the catalyst. And that's for sure. And too bad I didn't have 33. Got down to 33 and a quarter. So we had 32. So be careful down there at the 32 area. It's a bummer, actually. It's been controlled volatility, though. I mean, it's moving around, but at least it's giving us. It's kind of doing what it's going to a level, breaking, giving us a chance, bouncing off, giving us a chance to cancel, giving us a chance to adjust. Today we're working a little. Today, unfortunately, it's not. It's not unfortunate. It's just it is what it is. One of the most powerful businessmen in the world, Jack Ma, a founder of e-commerce colossal Alibaba, but he's found himself at odds with the Chinese government after he criticized Chinese state-owned banks last year. Beijing retaliated with antitrust investigation into Alibaba and pulled a listing of Ant Group, set to be the world's biggest IPO, in which Alibaba owns a third stake. The latest, the financial payment powerhouse, which is also China's largest holder of consumer credit information, has defied intense government pressure by only giving a small amount of financial data to the country's central bank. Personal credit information is so-called public good, according to the Bank of China, and should be kept by the publicly owned entity or government agency. The central bank has long wanted to create a pool of credit data to help state-owned banks gauge creditworthiness due to the increasing consumer loan defaults. All right, so there you have a nice little pop here now. Again, well, those are helping you out, those 5-point stops. That's right there, Mark. You adjusted to 5-point stops, so that's good. And you're getting the 5-point rotations, so that's good too. Ant is China's largest holder of consumer credit data, while its Alipay app is the country's biggest payment platform. The company, along with retail behemoth Alibaba, has seen Jack Ma becomes China's richest person, though he lost the title this week as his business empire came under regulatory scrutiny. Yep, that's a little dangerous out there. Government doesn't like you. They put pressure on you. They sick the dogs on you, and the guy can't be seen in public anymore. What a surprise. He's not in jail. He's Not in jail. Ant will clearly likely cave in because, after all, it's a Chinese company and must listen to the government to stay in business. But Ma's fight with the authorities is another example of the escalating tensions between the state and China's private sector, as President Xi exerts tighter control over the economy. Well, he's like trying to be a ruler of some sort. Another area to consider is consumer trust in Ant Group, with many clients complaining online that they will walk away if their credit info is reported to the government. Uh-oh, what's going on over there? That could be dangerous. That could be really dangerous. President Xi, man, he's flexing his muscle over there. Yeah, otherwise known as President Xi. I don't know how you get Xi from Xi, but hey, it's okay. Whatever. Well, the people voted him in? Really? You're going to tell me that there's actually voting in that country? The people voted him in? Which people? Come on now. They don't have voting over there. It's not a democratic country. I don't know what you're talking about. There's no voting going on. They don't have voting there. Everything's government controlled. You can't do anything without the government doing it. The Congress there of China, whatever that is also government controlled, and they voted him in. It's not like the people voted him in. Let's not get well, I mean, Jack Ma is speaking up against him because he's the richest guy in China, and they're squeezing him, and he's probably seen the fruits of his labor on the other side of the fence and doesn't like what's going on in China. So, look, these people are China. The government owns everything there. There's no private. I mean, there are private citizens who are making a lot of money. Jack Ma's the richest guy, and he doesn't like what's going on, so he's speaking out against them. And they went and slapping him with some some kind of penalty or some kind of legal thing, keeping him in trouble. It's a corrupt country. I mean they're also a billion people, which is amazing. But at the end of the day, they're still that's why for many a year, people have been some analysts have always doubted the numbers that are coming out of China as far as the growth are concerned, because they just never thought that they always think those numbers are made up because the government makes them up. There's no independent way of checking what those numbers are. So all right. So we've come down, and now we've got down to 33 and change. Remember that. So got to be a little bit careful here against the 32. Again, we keep going back to, adjusting a little bit. Yeah, well, what do you think? That's not going to happen over there. That's what the Chinese government is going to do, but they can't do it. I mean, they're trying to do the same thing. What's happening in Saudi Arabia is happening over there too. You know, just a matter of Saudi Arabia is more focused on a group of people. This is in China is more the government, totally the government, and they obviously have, you know, that Congress that they have is, you know, is controls everything, but I guess maybe the same group of people that Saudi Arabia has, but I don't know, whatever. It's I'm not going to have that much money to have to worry about it, so it's okay. Yeah, it is. The market is moving really fast and bouncing really quickly off of areas. Obviously, you see this this little 5-minute bar here is already at 12, 15 points in a second. So it is definitely a little wicked. It's gotten into this little. Well, again, this is like that no trade zone area that we're talking about. So the resistance right now would be around the 52 to 54 area, but just be a little bit careful here with the volatility that's being injected, almost to the point where you might have to increase your stops here a little bit if they continue to downtick. But it is what it is. Definitely got some volatility injected to the market, and there's some, we do have the unemployment number coming out on Friday, and and there's also, they're going back and forth here on the what it means, what it doesn't mean. So, but that's what happens these days. The markets really are, especially when you have some downward pressure, they do move a lot quicker than the upward rally markets. All right. Again, anybody has any questions? Hopefully, we've been trying to explain things here along the way, but if you have any questions as to what we do, how we do things, please feel free to ask or put it in the chat box. Any commentary that you might have, put it in the chat box area. I'll be able to see that as I have that that window open. So if you need to ask a question as to how we do things, what we're trying to do, please feel free to ask. All right, we got ourselves stuck in a little bit of a range here, as you can tell. Bouncing up against the 50 area. We had 52 as a little resistance. Yeah, we're definitely getting stuck in a little bit of a range, trying to bounce off. So 50, so be a little bit careful. 52 to 54 areas, some resistance. I think if we get above 56, you don't want to be short. Downside support, well, a little support at 40, but that's if you're a little aggressive. Otherwise, look for our 32 on the downside there. That's still our support level, but maybe adjust a little bit lower, maybe down to 31 to 29 area instead, the way the markets are moving around here a little bit. Somebody suggested, and maybe it's possible, probably the right thing to do is extend your stops here a little bit as the market's getting a little bit more, as it continues to downtick, getting a little bit more volatile. All right, we had a little bit of support there at the 40 area. If you were looking for an entry point there to get long, again, if you're a little aggressive there, we suggested the 40 area is a little buy. Go right down to 40 here, and nice rotation off of that 40 level. Again, these are price action opportunities that occur. Once the market paints some bars, that was definitely one of them. As if you're trying to stay long, have a trailing stop along with it. It is moving kind of fast here, but we are getting a nice rotation there off of the 40 if you look to jump in there and get long. And if you are trying to stay long, see where you want to get out here, at least some of your longs here. So nice little trade there if you did a jump in. Obviously, this is the top of the value area, so that's why I suggest you want to get long. If we do get above 50, there is a chance to get up to the 54 area. But definitely whipping around here. And again, if you did buy the 40 area there, you did okay. All right, now we're getting up here to this again. If you're going to be this is trying to keep you long here. This is where you want to get out of any other longs that you have against that 40 area. That was a quick rotation, right? I mean, just amazing. I knew it was going to work that well, right? Who knew? Man, we are definitely moving around here a lot. And, but we did say we had support there at 40. Now we're coming up here to the 54, which again was my top end resistance. So if you did sell them up here, you get a nice little quick rotation off of that level. These are inter-day trades here, enter price action opportunities that the market gives us. And if you did buy the 40 there, who knew it was going to be on the same bar? I wish I could have told you that. And a nice little quick rotation. Maybe you got long down there, maybe you got short up here against the 54. Either way, you should have done okay. One of those trades, hopefully, you picked up on. And that kind of makes up for this kind of goofy 38 level that we had to work around. So again, anybody has any questions, please feel free to ask. We kind of do this every day, so I don't know, call me lucky. I guess I could say I got lucky there with all these trades. Sometimes you get lucky. But I think that anything that I say is there's a reason for it. I don't make these up. There's just some areas there that the market kind of stopped and started before, so use the same area again. All right, nice rotation there off of our 54. And you blue banders are loving that trade. And hopefully if you did use that level there as well, that helped you out. Now, if you look at the ladder ticket, there's 2,600 offered at 50. Right? You can, I don't know if some of you can see that or not, but that's how you can see what's in the ladder ticket. And it seems like he's staying there with it. We'll see if it gets taken out or not. At least it's time being, it's not moving. Yeah, you got it. I knew you were going to get that one there, Mark. Love that blue band trade. Did you buy the 42 or no? You didn't buy the 40s. That's not your trade. All right, so we got this order here. Oh, nice. You did buy the 40s. Very impressive. I know you rode it all the way up to that blue band, that's for sure. So you didn't have a choice. It happened so fast. All right, that 22,000 lot is still situated. Did it get taken out? It got canceled. I kind of knew. I knew it got canceled. All right, so nice trade there for you. Nice, we're closed. It's funny. All right. So we're taking advantage of this volatility here, so it's not too bad. All right, so nice little quick trade here towards the end of our morning hour trade. All right, now we've got ourselves into this no trade zone area. If we get above 56, I think we rotate a little bit higher here. But anywhere in this little range here becomes a little no trade zone area.
Hey, quick shout out to Judy. Hey, Judy, you back? Let me know in chat, Judy. Tried to reach out to you yesterday. Judy, I think you're signed up for Sol's Monthly. Can you just let me know back in chat? I'm not sure if it's another name on the registration for the monthly. It's for Judy B. Hey, Prasad, I can send out for you to sign up for his monthly. You ready to do that? Just let me know back in chat. Use the chat feature to respond. Well, Hammond, you gotta get in the game here, buddy. You know, a lot of the issues with trading can be solved when people do Sol's intensive. But I think you know that already. Hey, Dan, I spoke to Sol about our conversation, and he wanted to do or have a conversation with you directly. Is that something you'd like to do? That's for Dan W. Hey, Chad.
Yeah, Mohammed, this trade right now is you know, you have to pick your spots. It's moving around too fast and too much to try to guess. We had a buy at 40 and we had a sell at 54. And that was the only trades that we had here over in this little chop area since our level there got, it didn't get triggered. So I stayed away from it, but we did trigger. We did go down to 40 and bounced off, and then we did sell off at 54. And those are the only two trades we would have taken in the last half hour if we were looking for something. Again, it's a matter of picking your spots and knowing where your spots are, at least taking a spot that will give us the maximum a good effort to try to make a little bit of money. We stay away when it gets like choppy like that. We definitely stay away from it. Right now, we're getting a little bit bullish on the market here. We're thinking maybe it might rally up to the at least 2-hour pivot area there. Again, because the volatility has increased a little bit, we're looking, maybe 4 or 5 points right now with our stops. At least initially, those 5-minute bars are getting pretty big. I mean, considering there's some volatility, but we also have to stay away here from this. So you got to pick your spots the best you can. Again, support there right now would be around 52-ish. I'm looking for a push higher. Anything below 48, you're out of any longs. Again, trying to keep you a little long here, looking for rotation up here to the 59 area, and we're getting up here. Again, we shifted our mindset here. We got up there to the 59, so again, that's where was our target. And it's very whippy, but we did get our target up there at 59. And you can be long here as long as we stay above the 48 area. All right. So again, we did want to keep you along to 59. The 59 was a little bit of a sale, that area, again, for a reason. And if you did, take it or get long or even got short against it, you got a nice little rotation. Again, you have to pick your spot, and there's reasons why we're finding these spots. So I'm not making these ideas up here. I'm also telling you them before it happens. So there's reasons why they're happening, and that's what we try to teach here in our education courses. And anything that I say here is not made up. It is there's obviously some reasons behind it, and that's what we want you to try to do. We want you to try to find these areas on your own, to be able to understand why they are going to work or not, and to be able to trade independently of anyone, to just be an independent trader. That's the goal here of the course, and the goal here of what we're trying to do every day on an everyday basis, trying to help you find these areas and understand why they work. And especially with our education course, where we want you to be able to do this on your own. That's what we'll do here on an everyday basis, and we can, um, hopefully some of our traders are spotting or seeing the same things. And that way, we're all on the same page. All right, Mark, good. Glad you had a good morning again, and I'm glad you're going to go take a nap again. Sorry to get you out of bed these days. Hope I didn't keep you up too long. You guys in California there, you just make me laugh. I'm going back to bed. Thanks a lot. Oh, there's the numbers in the chat. Because he's leaving us, he's giving us the numbers one last time. You're the best. You're the best. All right, market continues to stay strong here. Again, we're trying to keep you a little bit long. We gave you an exit strategy there below 48. So, this is, if we're looking about, we got down to what, 54 there, and could have maybe, you got to find your spots to get in and also have your exit strategy. Once we have our exit strategy, now we look in here upside. Market continues to uptick here. Next level we got is up at 64.5 area. That was the original first level, but we already that already worked out. So that's a little bit of a, I don't know if that's going to be a strong level. If you're looking for a stronger level, probably look at the 74 area if we continue to uptick here, and if you're trying to stay long. All right, good trade there. You got you got 6 points on it. Hopefully, you took some profits. I mean, or take some profits, and hopefully, you still have some more contracts on, so you can write it up a little bit more. But you have to take profits here, otherwise, you let a nice winner turn into a loser, and it doesn't really do anybody any good, right? So you definitely have to take some profits along the way here. That's the problem. Well, it's not a problem. It it limits your ability to work a trade. And you got, if you have your 48 stop and you bought 54s, which is 6 points, and we got up to 60 there, above 60, almost to 61. Your risk reward is the same. You should have taken, again, if you, I know you're trying to hit the home run play, but if you were thinking about it, if you're trading more than one contract, that's what you're doing. You're taking profits at 6 points because your stop is at 6 points if you have multiple contracts, and that way, if you adjust your stops a little bit, you can do that as well. So that you don't let the trade turn into a loser, stuff like that. But the markets are moving around too much not to take some profits, especially if you have an equal stop to profit ratio. And if for example, let's say you sold at 60 or 61, whatever, and it went up to 70, that's okay. You know what I'm saying? I mean, it's okay. You can't look at it like, oh, damn, I should have held on. That's not how it works around here. Not if, you want to be successful, you got to take some profits. And even if it goes up to 70 and you got out at 60, that's fine. You can't, nobody's going to, you're not going to go broke taking profits. That's what the trading gods once told me. All right. Again, right now, market is kind of just drifting sideways now. This is getting to the late afternoon trade, but it becomes a little bit more sticky. It doesn't really move around that much. Maybe gets a little bit too choppy. And definitely the volatility has been sucked out of the market just a little bit. All right, as you can see here, we've definitely some volatility has been sucked out of the market, which is understandable. Gets to late afternoon, late morning trade, gets a little bit more quiet, and so these things do happen. All right, a little support right in here. Again, anything below 48 out of any longs. All right, we got down to the 50 area there, a little support. Again, we said below 48 out of any longs. If we did buy the support area there around the 50, 51, you get a nice little rotation here. All right, nice little buy there on that lower support level. Again, below 48 out of any longs. So if you we're patient and waited for a little dip down to that support level there at 50 or 51. You definitely got paid off here. All right, nice little trade there for you if you did get long. Again, we got resistance up here to 64 a little. And then above that, we'll look for better resistance would be at the 74 area. All right, so nice little trade there if you did get in. Again, being patient, waiting for the opportunity, waiting for the level to get triggered instead of just jumping in the middle. The market always has these extends some levels because it just gets overbought or oversold for that moment, and then gives us a rotation to a level where we are ready to either get in, get short, or get long. But we're waiting for that reaction to the market to give us that opportunity. And that's what happened there when it drifted down to the 50 area. And like I said, if you wanted a tight 2-point stop, you got it. A 3 or 4-point stop, you still got it. And we had an exit strategy there below the 48. So you could have found taken as much risk as you wanted to. As long as you know where your exit strategy is, it gives you the opportunity to manage your risk on one side, and then you know at least where your entry point would be. All right, we'll take a little bit of a break here as we come here to the end of the morning session. And again, we're trying to keep you along, hopefully take some profits. We have good resistance there. Well, you're targeting the 64 area. And then, but you have better resistance, or then our resistance comes into play up there at 74. Obviously, might go retest the 70 there for obvious reasons initially, and then look for 74 above. All right, well, this is where we're kind of targeting. This is the secondary target level that we had here was the 74 area. So again, if you did get long and trying to stay long, that's where you are. You did buy that dip there, and eventually we're looking up at 74, some good resistance. You're just getting out of longs here. You're not going to get short. All right. Again, anybody have any Questions? Good time to ask, because otherwise we're going to take a little bit of a break. Get back in a bit.